Welcome to a little talk about relevant record keeping. My name is David Van Eckhout. I am the farm program director at the Good Acre, which is a food hub in St. Paul, Minnesota. Thank you. Just a little about me. So I am a little different than a lot of the people who are going to talk about finances and stuff in that I'm a farmer. I farmed for about 20 years before I took a job as at a nonprofit. So I started farming in 1998, doing organic vegetables. Worked for a number of other farms for several years before my wife and I started our farm in western Wisconsin. We were primarily an organic vegetable CSA. We grew on about 8 acres or so, about $180,000 in gross sales. So we did that. We did CSA for about 15 years. And about the time that the CSA market really started to go downhill, which if any of you are longtime CSA farmers, you know when that was, about 2012, 2013. We started to struggle pretty significantly. I at that time was really thinking about a lot of the issues around sustainability and whether or not farming was really profitable and whether or not farms like mine, which was, again, about $150,000 to $200,000 in gross sales, could really survive. I also had a lot of concerns about the burgeoning farm beginnings world and how many things there were going on trying to pull new farmers into farming when I felt like we really didn't have a good handle on whether or not you could actually make a living doing it. And I felt like I wanted to shift gears and really try and figure that out a little more as someone who had been trying to farm. It's, I wouldn't say I've got an answer yet. It's an ongoing discussion, but about that time, I decided I wanted to transition out of farming, and there was this job at the Good Acre available. And my role at the Good Acre really started out primarily as offering production-related technical assistance to farmers. So we work with a lot of farmers who may not have access to some of the resources like a conference like this, or going to Moses and La Crosse, or whatever. So, and at that time, this is about 2017, there even wasn't a lot of help from U of M Extension. That's changed significantly in the last 5 years, but at that time, there really wasn't a lot of help from Extension either. So we really needed somebody to go out to farms, help them if they needed soil tests, look at disease and pest issues, help with logistics around irrigation or whatever farmers needed. And the only person who could really do that was someone who had been farming. And so I started in that role and at the same time started to work in the direction of like moving into offering business technical assistance as well. I don't do quite as much of that as I do. Well, that's kind of my winter job, is doing the business piece. In the summer, I do more production related assistance on farms. So I visit a lot of farms, which is a pretty great job to have, visiting farms. Farmers are awesome. It's fun to talk with farmers. A lot of farmers want to talk because you're the first person they've seen in a week. So it's fun to have those conversations. I've made some really good friends doing it, and it's really been a treat. But I still have this nagging thing about the finances and how can we make sure that it's not all for naught. I thought that panel discussion we just had was really interesting in that Tamara and Hannah, who are on it, as livestock farmers, they seem like they're a lot further along in some of the viability piece than the vegetable farmers are. And that's another thing. I work with mainly vegetable producers. So it's great to come to a thing like this, or it's great to go to Moses too and go to workshops that are kind of outside of your wheelhouse and hear how those farmers are doing, because I do think that it's really a lot of the vegetable farmers and specialty crop farmers that are really scratching their heads about how to make their work-life balance makes sense. So it's interesting to hear livestock farmers. I don't talk to a lot of livestock farmers, so that was kind of fun. So one thing before I talk about numbers and spreadsheets and things like that, I also like to think about the perspective. You know, it's really easy to look at all these spreadsheets and talk about numbers and forget about why you started farming and why you're here today and why this was important to your family. For us, it was really about wanting to provide food for our family, and knowing where it came from. That was kind of the number one thing. But I think also with, you know, do young farmers still read Wendell Berry? Or was that just my generation that did? Yes? Okay, good. But he's got this great poem, and this is just a part of it. Say that your main crop is the forest that you did not plant, that you will not live to harvest. Say that the leaves are harvested when they've rotted into the mold. Call that profit. And you know, I like that. We have to make our businesses work. We have to be able to survive. But it's really important to keep perspective on what you're doing and why you're doing it also. I think that's something I lost on my farm, is I lost that perspective. And that once you lose that perspective, it's really challenging to keep farming. There's other things about the profitability of farming that I think get really complicated. You know, when you talk to banks and you talk to lenders or you talk to the FSA, you know, they want a certain set of numbers from you because that's what agribusiness working with them has kind of developed over the years. And for small operations that are working on specialty crops or niche markets for livestock or whatever, you really have different metrics that you're looking at on your farm than what some of these lenders and other outside parties are asking for. And so one of the reasons that I like to step away from those numbers a little bit is because those businesses have a tendency to externalize a lot of their costs. And when I say that, what I mean is that society takes a lot of what they do and we cover the cost of it. You know, whether that's the hypoxic zone in the Gulf of Mexico, whether that's erosion in the soil. And I think for us as small producers, small family scale producers, it's really important to understand that we're trying to internalize all the costs. It's really important for us to do that. And sometimes when we're looking at numbers strictly from a lender perspective, we're doing the same thing as those businesses are doing. We're trying to externalize everything because they can do that. And I don't think we can do that on our farms. We have to be responsible for the health of our soil in a different way. And so sometimes when I think about profitability, I also like to think about that. You know, Noam Chomsky said, you know, these companies, what they'll do is they'll privatize profits, but they'll socialize expenses. You know, so it's like they're going to keep the profit, and when they get a really good year, they're really psyched because they're geniuses, because they made all this money. But then in a bad year, they're going to say, oh, wait a minute, we need help with this. We need a handout, we need whatever it is. And I think as small farms, we need to think about that stuff differently. So that's why I like to think about the numbers a little differently than the banks and other outside entities like that. So I want to talk a little bit about good record-keeping habits, which is a really important piece of what I want to talk about today, because it's a habit and you have to get in it and you have to stick with it. That's the only way to do it and do it effectively. So this book, The E-Myth, came out like 30 years ago. It's just a kind of a general business book that's been around forever. And I don't even recommend going and buying it because I can tell you what it says. It just says that like too many small businesses fail because they got into the business of doing something that they really love to do, but then they didn't actually want to run a business doing that thing. They just wanted to do that thing. So as a farmer, you just wanted to farm. You wanted to be out in the field, you wanted to be on the tractor, you wanted to be walking through the pasture, whatever. You didn't want to be sitting at a desk doing the business work of the farm business. And it's an important thing to think about. You know, you have to want to run a farm business just as much as you want to farm. So, and some of this comes with the size of whatever operation you have. You know, if you feel like you can't take the time to run your farm business because you gross $25,000 a year, you know, I understand that's a difficult time because you're doing all the labor, you're doing everything on your farm. It's really hard to take time out of your day or at the end of a day and do your books because you're the only one doing the work. As a farm gets larger, it gets easier that one person kind of takes on that role. You know, I think farming couples have that advantage where somebody is you know, like Margot and Andrew before. Andrew's good at books, Margot's not. They know that about themselves, so they can divvy up that labor that way. That's a real benefit. My wife was not a farmer, so I was kind of doing everything, and so I had to be the one doing the books too. So that's also very challenging. You know, there's challenges to all sides of farming, including whether or not both people farm or one of them doesn't farm. I'll also say one other thing about that. If you feel like you can't take the time out of your day to do the record keeping that would help your business, and you think that like, well, I could just hire a bookkeeper. I can just hire someone to do that for me and pay them $200 a week to enter all the transactions, and then I don't have to worry about it, and it's getting done during the season. I mean, that is something that you can do, but I would actually caution against thinking that that's a great solution, because what you lose sight of then is you lose sight of what's really going on in your business if someone else is always the one doing it. Now, maybe you're really good communicating with that person and you got it all figured out. But I think too often the farms I've seen do that, you know, and then everything's electronic. So their bookkeeper's just getting everything electronically. There's layer upon layer of separation from your books and your numbers that while it might make you feel better during the season that it's getting done, you still don't really have that good of an idea of what's really going on with the business when you kind of give up that control. I'm a little bit of a control freak, I'll admit that. So there's a lot of people who have good bookkeeping relationships. I prefer to do my own, and except when it comes to payroll. Payroll's a pain. So you can do it yourself, but that is a good place to outsource. So I often say that running a farm without good record keeping is like going, well, out into these woods here, as far as you could go with no map and no compass, and you just end up lost and busy all the time. And that's how it feels like on a farm when you don't set aside the time to keep up with your books. So, you know, your farm is limited in the resources it has. You have your soil resource, you have all these other things, but time and money are two things you can't get any more of, but you can, with good record keeping, you can actually budget those things effectively so that it's almost like you make more of it. You don't necessarily make any more of it. But I do think it can really lead to situations where you find, oh, I actually have more of this than I thought I had because I know and I can see where it's going and what it's doing. Yeah, like planting a tree, good record keeping is best to start 20 years ago, but the second best time is right now. So you know, one thing to ask yourself, and you know, we're talking about record keeping, and when I say record keeping, I'm really talking more about financial record keeping. There are a lot of other record keeping apps out there. You know, we've got all these crop planning apps and weather related apps and employee timing apps and all this other kind of stuff. But I'm really talking more about like your business records and how you do that. And one of the things to ask yourself is like, why am I keeping these records? Who wants these records? You know, am I keeping this for myself and my business? Or am I keeping it for somebody else? And we all are in situations where we need to keep certain records for outside providers. You know, the IRS, of course, is one. Your organic certifier, if you're organic, is another. If you have other certifications, you may need to keep something for those. Food safety related records. There are all kinds of records that other people want you to keep. I mean, certainly, you know, your lender or other organizations and our CSFSA might have certain records they want you to keep. And that's one of the most challenging things. We're a lot more likely to keep records that someone else is demanding of us instead of the ones that we're demanding of ourselves in our own business. So in an ideal world, figure out if there are ways you can keep a record for somebody else that also is relevant to what you're doing. Or vice versa, find out what record you really want to know about your business and then make that work for somebody else too. A lot of times when outside organizations are asking for certain records from a farm, they have a lot of flexibility. And if you talk to them, certainly like an organic certifier can really have a lot of flexibility in what they can use, as long as you can justify it and explain why this is the way you're keeping those records. You don't have to use the templates that your certifier has or whatever. You can really come up with your own, especially if they help you figure out something else on your farm rather than just following along with whatever template they have. It's a really good idea also to like get to this time of year and think about how useful the records you're keeping right now are. You know, are there things that you want to add to the list of records that you're not keeping? Or are there records you could just stop keeping altogether because you never look at them? You know, if you don't actually use the information you're tracking to make decisions, why are you doing it? You know, and so looking at that this time of year to say like, you know, I'm not really using that piece of information. Number one, what could I do to make it more useful? Like how could I do that differently that I would actually use it to make decisions? Or could I just not keep that particular record and keep this other record that would actually help me decide something? So it's good to look at them every once in a while. I mean, if you've got a logbook of something you're doing and it's been sitting on the shelf for 2 years and you never look at it, why are you doing that? You know, it's good to reevaluate that pretty consistently. It's also really good if you have employees on your farm for them to see you doing it. It's good habit to get into. A lot of, I don't know how many of you have employees, but you know, employees, it's really hard to set yourself up for spending that time on your business record keeping if it takes you away from working with the crew, because there's just this feeling that as farmers, we should always be working. We should always be out there doing something productive, and that your employees are going to think you're just a lazy farmer if you're sitting at your desk, not out there alongside them harvesting or whatever it is. So you really have to get away from that. And one of the best ways to get away from that is by showing employees what you're doing with your records, why they're valuable, what kind of decisions you're making about this year versus next year with the information that you gathered last year. You know, really involving employees in the process can make a big difference. And that goes for a spouse too. You know, if you are the one person in the family who is more comfortable with numbers or spreadsheets or whatever, you know, take the time to explain and show your significant other that, you know, here's why we can make this decision is because I've figured this out by entering this each week, each month, whatever it is. So it's also really easy to get bogged down in the details of records. I talk about Duplos versus Legos. If you guys have kids, you know, it's like you need the big building blocks. You don't necessarily need every tiny little piece for decision making. You know, I mean, yes, there might be situations where you do need that level of detail, but as far as like trying to get to a place where you can decide, should I keep raising chickens or not? For those kinds of things, you don't need every penny. You need those big chunks of information, your big costs. You know, those are easy to pull out. Your labor costs are probably easy to pull out. Get the big blocks, plug those in and look at them. If you spend so much time trying to get every detailed thing that you don't actually get to a place where you can make a decision, you're not really helping yourself. Like I said, if employees can see you doing it, that really helps. If you can and are in a position to, and if you have employees that are interested in farming, it's really great if you can share your books with them. You know, it's really, most people who start a farm don't really understand the financial situation of a farm until they start it. You know, there's not a lot of education around like, this is the nuts and bolts of what it really costs and what it costs your family to start on this endeavor and stick in it. So if you can, that's a great thing to be able to share with the next generation of farmers is like, hey, you know, here's why I'm doing this. Here's our books. You can look at it. This is why, you know, I'm paying you $15 an hour. That's where it goes right here. You can see that, you know, hired labor is 40% of our costs, you know. It's really good that they understand that. So again, you know, just be reasonable. If you're sitting here in this room today and you're thinking like, I'm going to try and do a better job at record keeping next season, be reasonable. You know, pick a couple of things and really try and dial those in. If you decide I'm going to try and do everything this year, you're just not, you're going to last until about May 15th and then not fill anything else in your records. You know, so pick a couple of things that you really want to find out. Do you want to just keep up with the expenses you're spending? You know, that's a great thing to keep up on. Like I'm going to enter that every Friday at 3 o'clock. I'm going to enter the expenses for the week. You know, pick a time, pick something reasonable that's easily done, that you can achieve, and just stick with it. Don't try and do 82 different things simultaneously because they just won't keep happening. That also goes to a certain enterprise. If you've got an enterprise on your farm that you really question the viability of, maybe that's what you really dial in on this year. Like, I'm going to keep track of the chickens and just make sure that everything, everybody's time, every bit of feed, every trip to town to fix something, you know, that's all counted for in that enterprise. So each year is a good year to just take a bite like that without trying to eat it all at once. So blocking out time on your calendar to do this, I really recommend. If you have employees, they will understand if you get in the habit of doing that, oh, that's right, we can't bother him right now. This is his time to do the records. You know, whether it's at 5 a.m. or whether it's at 5 p.m. or whatever it is. And think of incentives for yourself. You know, especially if it's work you really don't like to do, think of something special. Like I don't know, if you do it in the evening, I'm gonna have a beer on Tuesday and do it, and I'm buying a special kind of beer that I only have when I'm doing that, and reward yourself. Somehow make it something to look forward to, you know? And that can go whatever direction you want, but treat yourself. It's a little bit of drudgery, and nobody likes to do it that much, but if you plan on it, stay consistent. I know there are always emergencies that come up, but figure out a way to reward yourself for doing it. It's really important. Again, talking about employees, them seeing you doing it is important, but then also them engaging them on doing some of their own record keeping is really good training for everybody. So don't try and do it all yourself because you're the farm owner. Yes, maybe you do all the financial record keeping, but there's no reason the employees can't log every, how much feed goes out to the chickens each day, or what the temperature of the cooler is every morning, or, when you last sanitized the crates, or who cleaned the bathroom last, or whatever. I mean, there's all these records, especially with food safety and organic certification, that we need to have. So just because you're the farm owner doesn't mean you should do it all. Do the ones that you feel like you really need to do, because otherwise they're going to be, you don't want them to be wrong. And that's where I would say the financial ones are important. But engage other employees or other people on the farm, and that goes for your significant other who doesn't like record keeping. Still, they need to do some of it too. There's plenty to do. Okay, so that's all kind of just general stuff about record keeping, and now I'm going to talk a little bit more about some specific things that I would recommend trying out on your farm if you haven't done it already. A lot of times when we're looking at, like Paul earlier today had some enterprise budgets up on the screen. How do we get those numbers that are on those enterprise budgets? And yeah, it's pretty easy to know the chicken feed goes on the chicken enterprise budget. But since labor is always our biggest cost, where does that labor number come from for different things? And one thing that can be really useful with this is something called time studies. And what time studies are, they're pretty widely used in, I think it comes out of manufacturing, where people needed to figure out how much time was somebody spending on the drill press to make this widget or whatever. Well, you can do that on the farm too, but I don't recommend doing it all the time. You can have elaborate timesheets for everyone on the farm, but everybody hates it, and so at some point you got to figure out different ways to do it. And what a time study does is you take a week and you decide, okay, everybody's going to track their time this week on the farm. So every hour you're working on the farm, and you can do it in hour blocks, that's fine, but every hour you're writing down what you're doing that week. And you can take weeks from different times of the year, so you're kind of capturing information about different times of the year. So like on a vegetable farm like ours, in March, we're in the greenhouse the whole time. So we're going to track that time when we do a time study in March. And then we're going to do a time study in June when harvest and delivery has started, and see how much time everybody's spending doing those things. And then we're going to do the same thing in September maybe. And the reason that you really don't need more than a week of that data is because then you can just extrapolate from that to say, like, how much time are we spending at the farmer's market each week? You can look at your June and September time study and know you went to the market for 24 weeks and just extrapolate out there's how many hours we're spending at the market. So it's a good, simple way to get a lot of really good data, and you don't really need to worry about it during the season. But then when you get to this time of year and you sit down and you're trying to make some decisions about your farm, you can go back and look at those numbers and say, you know what, we just spend too much time harvesting. Why do we spend so much time harvesting? And figure it out, Let's see. Since you're only doing it for a 1 week period every, a few times a year, you can also try and incentivize everyone on the farm to do a good job with it just by kind of working with each other, make it fun, have a pizza party on the end of the Friday of time study week or whatever. You can get as detailed with it as you like. If there are specific things you really want to find out, you can certainly do that. But, I mean, as you all know, a farm is not a factory. It's different. You live there, you eat all your meals there, you sleep there. So it's not exactly comparable to a situation where you're just, figuring in how long it takes you to do each endeavor. But it's a great way to separate out how much time you're spending on certain things on the farm. And you can do it however you want in terms of how you divvy it up. So like here's just kind of an example time study sheet, and if you want to copy down that, these couple slides aren't in the handout because I just did them later, but if you want to copy down that link, you can get just get access to that template and use it. If you do that, it's in Google Sheets, and you'll have to go File, Make a Copy in order to edit it because it's locked. But so you can just, you can decide on what activities you want to track. Like here I wanted to track chickens. How much time are we spending on chickens? Here, planting, how much time are we spending? And this is just 1 week, or well, this is just 1 day of 1 week. But at the end of this week, I can add it all up and then just say, how many weeks did we have chickens on the farm? Okay, let's use that number. It's just a simple way to use chunks of information to try and make some decisions about the enterprises. I mean, you can do that with farmers market too. Farmers market's a notorious time suck that just uses way more time than you think it does. That's another good one to try and track with something like this. Your harvesting, your post-harvest handling, marketing. It depends how you define marketing, but one thing that I like to do when I'm working with people is I like to define marketing as, at least on the mixed vegetable farm, marketing is anything after the produce is in the cooler. So you grew it all, you harvested it all, you washed it all, you put it in boxes, it went into the cooler. Now everything else is marketing. As soon as you pull it out, it's marketing. You pull it out to pack a CSA box, you pull it out to load onto the truck to drive to farmer's market, you pull it out to ship to wholesale. That's all marketing costs. And I think one thing that we really don't do a good job of in the small specialty crop farming world is accounting for our marketing costs and how expensive it is. And so if you want to compare your market channels and do stuff like that, it's a really good idea to dial in on some of those market costs. It can really make a huge difference in how you make decisions on your farm when you have some of this information. So I figured out that there were 3 of us who went to the farmer's market. We each spent 6 hours loading the truck, going there, setting up. I've got 18 hours of labor at $15 an hour in the farmer's market. So I spent almost $300 before we even sell anything. If I only take home $600 from that market, I haven't even entered in the cost of the produce that I grow. That's just the marketing cost. So really looking at how much you're spending on marketing can have a significant impact when you start thinking about, well, what if I sold some things wholesale? What would that look like? All of a sudden, my marketing cost is 10% instead of 40% of my sales. Rachel was talking, if you guys were listening to Rachel Armstrong before, she was talking about workers' comp. And one interesting thing about workers' comp too is you can actually, if you have this kind of data, like how much time your employees are spending doing certain things, you may actually be able to classify your employees in different classifications for workers' comp, because farmer is expensive, on a workers' comp thing. So if you're a farmer, that's expensive. If you have somebody who works in the office for you 4 hours every 3 days or 3 days a week or something, you shouldn't be paying workers' comp for a farmer for that position. You should be paying an office rate, which might be, farmer might be $10 per thousand, an office person might be $1 per thousand. So but only if you have this kind of data and can say to your workers' comp agent that actually we aren't all 50-hour-a-week farmers, Some of it, you can break it down and really save a significant amount of money on workers' comp. You know, it could also help you if you're interested in looking specifically at cost of production on certain items. I'm not going to go too far into cost of production on an individual item, but it's still something to think about if you are, especially if you are seriously in wholesale. You really have to have your cost of production nailed down, or don't wholesale. All right, let's switch gears and talk a little about why we should keep good records. Everybody, you guys have seen the Schedule F to death, so we don't need to go too deep into that. You know, what I'd like to talk a little bit more about on this, though, is that I don't recommend your Schedule F as like a starting point for how you keep your records, just because that's the way the IRS does it. Again, think about what you need, not like I'm starting a new farm and I'm going to set up a chart of accounts and I'm going to use all the categories on a Schedule F. That's, you know, what I'm going to start with. You know, that's not going to be that helpful for you. Yeah, it'll make filing your taxes easier, but it's not going to help you make any decisions. So a Schedule F is just that form you have to fill out, and you can put stuff almost, no one is going to give you any grief no matter where you put stuff on this thing. So don't sweat the Schedule F. It's easy. Nobody really looks at it very much. I don't recommend using it as a good resource because it, again, is for a completely different reason than you running your farm business. It's just for somebody else to collect information from you about it. A few of you probably use QuickBooks. If you use QuickBooks, you can actually map, well, if you use QuickBooks Desktop, you can actually map your accounts into these categories on a Schedule F. That can really make your life easier at tax time, but you can only do that on the desktop. You can't do that online. It's also really, you know, Schedule F doesn't capture any information about your cost of production. It's got weird things in there like depreciation, which is not a cash expense. So that can make it kind of confusing. If you're, you know, the goal is to not pay very much taxes. You don't want a lot of net income on the bottom of your Schedule F, but that also consequently makes it harder for you to get a loan if you show no income on your farm. You can't cash flow it if your Schedule F says net farm income $2.35. You know, one other tricky thing about the Schedule F, which I think people should be aware of and be a little bit careful about, is if you do value added or anything like that, it actually doesn't belong on a Schedule F. It's like a separate business. You know, so if you're an apple orchard and you make cider, cider doesn't belong on a Schedule F because you're processing a product, and now all of a sudden that's a Schedule C that you need to have a separate Schedule C that you file for anything you do value added. A lot of times people don't do that, and it's rare that people get caught at that, but technically those kinds of things don't belong on a Schedule F, just raw farm products.
We have an account to our taxes basically accepting that, right?
No. I mean, there is, you know, it depends where you are and what your accountant's like. There are not a lot of good accountants for small farm businesses. I struggled with that for years, like correcting things that my accountant would do because it was like, no, that's, you know, not right. If you know someone who has someone they really like and can recommend them to you, that's a good way to find a good accountant. And the other tricky thing about accountants is they're there to represent the tax code as lawfully as they can. And sometimes that's not your best person to ask advice from. And in fact, I've found over the years that getting advice from a CPA is difficult, you know, because that's not their role. Their role is to boom, 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 do this like you're supposed to do it, ask you the right questions, and then send you on your way. when I ask a question, it's, you know, I mean, you get a very lawyerly answer, like, it depends. So I wouldn't trust that the accountant's going to catch that, but you can always take it to somebody else and see what they say. Yeah.
I just want to add, my CPA filer who does our taxes, our LLC's taxes, tells me to ask all my questions of a different accountant and then come to only answer the questions he asks.
That's,
And the advisor's finding someone that knows farm, and I've had a hard time doing that.
yeah, it's tricky. You know, I was surprised to hear Rachel say that, to go to talk to an accountant, because it's hard to find an accountant who really knows. Small farm, a lot of them know dairy and cash crops and stuff, if they're in the farm country, but some of the stuff that you or I might work with, it's harder to find people that do that. So let's talk a little bit about internal versus external records. So an external record is a record that somebody outside your business wants from you. So the FSA, they want your external records. They want something that's outside of your business, that's all, I mean, that really should be compliant with the IRS and everything. Internal records are records you keep for yourself. No one else has to see them. You can do whatever you want with them. It's not uncommon for businesses to have 2 sets of books, and not because they're trying to do something to cheat the government or anything like that. It's just that the information that they want to know is different than the information that a bank wants to know, because they're trying to make decisions about their business. The bank is trying to make a decision about whether or not you're going to pay for your loan payments. You know, so again, thinking about who wants the information, and can you do it in such a way that it values your business also? The other, challenging thing about this is, obviously, you don't want to keep 2 sets of books because you're doubling your work. So how can you think about ways to do what someone else wants you to do while doing it in such a way that it benefits yourself? Every farm is different in that regard. It really depends on what kind of an operation you're running. Try and keep records for yourself that you can then take that round peg and stick it in a square hole for those external parties that want something from you. So definitions, you guys probably got all of this already from various things, so I'm going to go through it really fast. Main thing on financial statements: revenue, expenses, assets, liabilities, equity. One other kind of different definition of assets than what Paul was talking about this morning is it's something of value that's going to make you money further off in the distance, that it's not just for this year. It's going to continue to provide a meaningful benefit to your operation going forward. And I'm talking about, hard assets like a tractor, your land, things like that. So I'll just go through them quick. Revenue, it's money you receive, so you sell 100 pounds of carrots, you get $100, that's your revenue. The expenses are the costs that you incur in order to generate that revenue. So you paid for seed, you paid for fertility, you paid for labor. Those are your expenses as it pertains to the carrots that you sold for $100. I just talked about assets for a sec, liabilities, loans, and things like that. Equity is the ownership stake in your business, also called net worth. I don't really like that phrase because net worth implies that you're going to sell it all and then have that money left over. And is that really why you got into farming, so you can just sell everything and collect that money? No. So, it's good for the banks to understand like what your cash position is, what the position of your business is on a balance sheet or whatever. But it's not that helpful for you as a farmer who's trying to raise a family to know that, like, well, if I get hit by a bus tomorrow and they sell everything, this is how much they'll get. You know, it's a weird measurement. So I think it's important to have a good balance sheet. It's important to be able to show people that number, but that's not the number you necessarily want to be using to try and make business decisions. So let's see, you guys probably went through this yesterday if you were here, but the three main financial statements are the balance sheet, the income statement, and statement of cash flows. Income statement, also known as profit and loss, is just your revenue minus your expenses. That's your net profit or loss. Balance sheet, you know, Paul talked about this morning, it's just a snapshot of the equity that's in your farm business at any given moment. I'm not going to go too much into that since you guys are all experts at that by now, I'm guessing. I'm skipping ahead. Statement of cash flows, I'm not really going to talk about because it's like the most complicated financial statement there is. Basically, it's, you know, looking at where cash is going within your business, but it's complicated because there's a lot of adjustments that you make in order to get to it. And if you're using QuickBooks, you can run a statement of cash flows, and even that, it's kind of a confusing statement. When people are talking about doing a cash projection and looking at your cash flow, they're really looking at more like what Paul showed this morning, just a spreadsheet of when cash is coming in and what expenses are going out, something simple like that, whereas a statement of cash flows is just kind of more complicated. So here's just kind of a graphical representation of that. We've got, you know, the revenue and expense accounts, that's what leads to our income statement or our profit and loss. And what's very useful about the income statement is we can do several things with it. You know, if we have an income statement for each month of the year, then all of a sudden we have a monthly budget. You know, we can use those numbers from last year to make a budget for this year. So it's probably the most important thing you can have because it tells you how to get a budget, how to project from that budget using monthly projections, because if I sold $32,000 worth of stuff last July, there's a pretty good chance I'm going to sell $32,000 again this July. It's at least a starting point. You may know something about your business that would make that a different story, but it's a place to start with your business to say, let's base it on last year's numbers. This is our budget. Now we're going to project monthly and say that's where we're going to be. The other thing about an income statement is if you set your chart of accounts up, or however you're keeping your books, if you're doing it in Excel or Google Sheets, you can set your tabs up however you want to do it in such a way that you can do some enterprise analysis. And this is not that common in a lot of accounting programs to do it this way, but I prefer this method to doing an enterprise budget just because you can constantly track it during the year rather than just sitting down at the end of the year to look at an enterprise budget. And I'll talk about that a little more. So both those things, the monthly projections and the enterprise analysis, lead to decision making. And that's really what we're shooting for, is a way to make decisions. Okay, so I'm going to talk about chart of accounts for a little bit. We kind of get in the weeds with it, but I think it's important information. A lot of people just go along with whatever. If you're using QuickBooks, you're just using whatever you started with. Or worse, you're adding accounts every time you feel like it, which can really make a mess. You know, so think about your farm enterprises and create hierarchies based on those enterprises. There's a couple of handouts, and we'll talk about those in a minute, where I'm just working with a farmer in his chart of accounts and trying to simplify it and get better information from his statements. There's an organization, excuse me. There's an organization called Kitchen Table Consultants, which they do farm consulting on the East Coast and the West Coast. And they've kind of come up with this system for putting your chart of accounts into 7 different buckets. which I like. It's kind of an interesting way of doing it, and honestly, the ways that of doing it that are out there right now are not very good. So it's something I'm trying to help farmers move towards, and so we'll talk about that a little bit. The 7 buckets they have are revenue, cost of goods sold, operating expenses, labor, general and administration, fixed expenses, and one-time expenses. So this is kind of the hierarchy, how they like to set up a farm's chart of accounts. What they're doing that I think is kind of interesting is making heavy use of cost of goods sold. So in a typical, like, let's say you're a factory, your cost of goods sold to make a bookshelf is the lumber and the nails and the glue and the paint and everything else. It's all the parts that go into something in order for it to be ready to sell. So on a farm, the way we can think about cost of goods sold is, you know, it's, let's see, on a vegetable farm is seed, fertilizer, all the things you need to add in order to get a product out of the farm, including specific labor for that specific crop or that specific enterprise. And again, where are we going to get that labor number? We're going to get that labor number from our time studies. You know, so we're going to go back to those in the winter, and we're going to look at that, and we're going to say, oh, actually, you know, we record all our labor during the season, but then maybe at the end of the season, we want to move it back into the enterprises. So let's say we have a cost of goods sold for chickens, and we have a cost of goods sold for the vegetable operation. You know, if we keep that time study, we can go back and look at it, and then we could do a journal entry with our labor and divide it up based on whatever allocation of hours we found from our time study. So we can say, at that point, we can take, you know, 20% of our labor costs and move it over onto the chicken cost of goods sold so that we have a more accurate idea of what that enterprise is costing us. Now, you can do that more frequently if you want. I mean, that's awesome if you can. You know, some of this is going to depend on what sort of, again, what information you want to get from your farm business. So if you want to get based on an enterprise, there, you know, you can also divide it up in a different way, not by enterprise, but by market channel. You know, I want to know, I only grow organic vegetables, so is my wholesale channel more profitable than my retail channel? Because I have a CSA too. And so you can divide up your enterprises like that in your chart of accounts and track it that way. So let's look at this example quick. And this is an actual farmer that I've worked with some, and he had a chart of accounts. So this is a QuickBooks chart of accounts. You know, those of you who aren't using QuickBooks, that's fine. You can do the same thing with, you know, tabs in Google Sheets or Excel or however you want to do it. You can do the same with a paper notebook and just call the accounts different things and say, I'm going to have, in fact, I made one at some point. You know, you can make yourself a simple little record book like this. Like you've got, you know, each sheet's got sales, you know, the blue ones are expenses. And you could say, well, this blue sheet, I'm going to write down all the chicken expenses. You know, you don't have to get too fancy with it. You don't need to have QuickBooks. I just talk about QuickBooks because a lot of the farmers I work with use it. But there are situations where you want to look at your chart of accounts if you are using something like QuickBooks or even like that. You don't want to break things down into such tiny increments in terms of like, we're going to track everything separately. You know, figure out what bucket it goes in and put it in that bucket. So in the situation of this farm's chart of accounts, you know, he had things all over the place and no way to like look at is, you know, he's got, let's see, I can't see it here, potted plants, you know, so they raise transplants. You know, when everything is combined, it's really hard for them to know whether or not the sales of those transplants make them any money, you know. But if you pull it out and you put all the costs that go into raising those transplants separately, and you put them in this potted plant cost of goods sold, or COGS. So you put the sales in a separate account, and then you put the COGS all in a separate account. So you have a really quick way to look and see, how are we doing on that? You know, should we keep doing that, or should we not be doing that? So how do you know the difference between COGS and other types of expenses? Generally, COGS are specific to a thing, to an enterprise. So the potting mix is specific to the transplant enterprise. Oh, wait a minute, but we grow vegetables too, and we use those transplants. Well, it's complicated. So you do have to figure some of that stuff out and how to account for it, because there's always overlap. But if you can start by trying to track some of this stuff separately, track the revenue separately, so that you can have an easy way to subtract from the revenue the cost of goods that go into that specific thing. So you have a very quick and easy way to decide if that's profitable. Now, adding in labor is a big piece of it. So you always have to remember to try and track your labor in such a way that you can keep track of how those enterprises are doing. Otherwise, you know, it's impossible to get to a place where you can really compare apples to apples if you don't have the labor information. So when we do something called like an enterprise analysis, then, if we keep the records this way, we can take the revenue minus the cost of goods sold. And when we do that, that's just something called gross profit. You know, we haven't added in all the overhead. We haven't added in the cost of the electricity, or none of that. We're just looking specifically at that enterprise. We just want to know what the gross profit is from that enterprise. And then we do something called turn it into a gross margin, which is just where we take gross profit and divide it by the revenue. And we get a percentage. So we take revenue minus the cost of goods sold to get gross profit. And then we take gross profit and divide it by the revenue to know what percentage is our gross margin. So for retail vegetables, if we had 170,000 in retail vegetables, it cost us 146,000 to grow them. Our gross profit is $24,000. That's great, but it's only 14% is our gross margin. So do we have enough there in that gross profit to cover all our overhead or not? You know, that at that point you can look at your other operating expenses, things like your land costs, your mortgage, you know, things that don't change and aren't dependent on a specific enterprise. And what our gross margin tells us is that we're making basically 14 cents on every dollar of vegetables that we sell, you know. So it looks really good. We made $24,000. But then if we have good enough records to look at another part of our operation where we've got egg sales, well, we only made $3,000 selling eggs last year. Maybe we shouldn't bother with that. But if we look at our gross margin on it, we see that we actually make a 20% margin on eggs, whereas we only have a 14% margin on vegetables. So that helps us make decisions around what we're trying to do. Does everybody understand that? Okay. This really gets to the heart of like getting into your cost of production and things like that. What I find easier about this than enterprise budgets is you make it part of your normal accounting system to do this, rather than doing a separate thing in a separate spreadsheet or something in order to track, the profitability of the carrots you raise or whatever. And finding a way like margins to compare things that are different. you know? So very different parts of your business. One generated $170,000, one generated $15,000. They're vastly different scales. But by getting down to gross margin, we can decide, like, we can compare them to each other, whereas we can't any other way. And that's why it's so good to figure out a way like this that you can compare and make a decision at your business, like maybe we should scale up the eggs. I don't know. Because we are making more money at that for each dollar that we put into it than we are with the vegetables. Oh, I can't talk this long with a mask on. It's really not that fun. All right, that's a lot of information. So I'm going to stop there and we can have a discussion or answer any questions you guys have. Just a couple takeaways. You know, what are the enterprises on your farm? How can you, figure out ways to determine if they're profitable? Don't overwhelm yourself with records. Keep the ones that help you make decisions. Figure the costs that fit with the enterprises. Allocate others. Does everybody know what I mean when I say allocate? Just like, if in general, you're a 50-hour work week and it takes 5 hours a week, that's 10% of your time. There are other things on your farm you could allocate to that enterprise using that same percentage. We talked a little bit about that, or Paul talked a little bit about that on enterprise budgets. But there are multiple ways you can try and decide to allocate enterprises on your farm and how much of, a shared resource that they're using. You can do it by how much labor goes into that enterprise. That's one way to do it. You could track it by how much land that enterprise uses. So if that enterprise uses 50% of your land, you could say, by virtue of that, it also uses 50% of your electricity and 50% of your interest expense and 50% of, so that's just allocating. You can decide how you want to allocate things yourself. It's just a way to try and manage your business and have a way that you can at least justify to somebody else, or again, to compare two different things together by doing it the same way for both of them. Okay? And then time studies. That's it. So if there's questions, we can talk about it. Or if you guys have other input, like, I don't know it all. I'm not an accountant. I'm a farmer who does this on the side, basically. So, yeah.
I have a question about that kitchen table consultants. Is that something that's a web page?
Well, they're a consulting firm, so yeah, they have a really nice web page, and they have a lot of free resources. So yeah, I'd recommend it. I'm sure just Google kitchen table consultants and you'll find them. They're pretty well known. Yeah.
Just a couple of minutes ago, you said that gross margin is one way to compare different enterprises. You find it in a good tool, compare if you're considering continuing with one or the other or whatever. But Paul, it sounded like Paul had a similar tool that was also used for comparison. Not that one is better than the other, but what was the one that Paul was talking about? Is that enterprise budget?
Yeah, he was talking about enterprise budgets.
But am I wrong in saying that they're both two different ways of accomplishing the same thing and looking at, the numbers wise, like the pros and cons?
Yeah, I think the biggest difference is that in gross margin analysis, you're not adding in overhead. You're keeping that separate because your overhead's going to likely be the same, or again, that's going to be one of those things you allocate depending on how many resources that enterprise uses. But and if you notice when he was doing that, the overhead number was the same, so it didn't really matter. But so I think enterprise analysis and gross margin analysis, they're just a little cleaner way of doing it because you're not putting overhead into the equation. And again, it's a little more of a internal business way to do it rather than what a lender would do. Yep. Yeah.
I have a question about Quicken versus QuickBooks. You referenced is Quicken enough? Or are there specific features in QuickBooks that you think justify that extra level of application?
Well, this gets into opinion rather than fact, but I will say that, you know, the main difference between Quicken and QuickBooks is Quicken is a checkbook-based single entry system, whereas QuickBooks is a full double entry accounting system. So when you enter something in QuickBooks, there's both a debit and a credit side of the transaction, always. So in Quicken, that's not the case. So Quicken is like having your checkbook register just automated. So I would say there's, yeah, I mean, I don't know, a lot of people don't use Quicken for business. It's better for your personal checkbook, but that's the reason why. It's not a double entry accounting system. You had a question?
Let's say you are comparing two enterprises, and one enterprise uses hired labor, the other enterprise uses primarily the farm owner labor, which is hard to account for because you're not actually maybe paying yourself, maybe taking over a draw, but it's not actually like a labor cost that can be tracked in an accounting system.
Yeah, so our question was about how do you deal with owner draw when you're looking at budgets like that, because the owner's draw isn't tracked in the same place as like just paying someone else for outside labor. That is a challenging piece. I agree with you. In general, what you should do is, you know, again, that's not going to come straight out of your accounting software. You're probably going to have to do a little back end stuff to make that happen. But what, you know, farm business management would tell you to do, or a lender would probably tell you to do, is value your time at about $40,000 an hour, $50,000 an hour, whatever you think is reasonable, and then plug, you know, because you're taking it under draws, or you're maybe taking it at the end of the year, not even under a draw. You could still put it in there as a placeholder and delete it later if you wanted to make sure that it came across in the income statement. But you could also just do it separately. Like you could, you know, if you're using QuickBooks, you could export it to Excel and add it in that way. But yeah, it's tricky.
Yeah, I feel like there's a lot of things like that that aren't tracked in your automatically in your accounting system, such as fuel or earning use of your own car or opposite home, things like that. Like that's what I always find tricky is like I'm always figuring those things out for my taxes, but I don't always have that as a clear picture as I'm going through the year trying to plan my decisions.
Yep. No, you're absolutely right. It's a challenge. Yeah. Other questions? And by no means do I necessarily recommend QuickBooks. I find it a very frustrating program, just because they have so much market dominance that they can do whatever they want, and they don't have a lot of support for farms. You know, if you go online, they don't have a Schedule F, you know, and if you do your payroll through Quicken or Intuit, they don't support, you know, filing a 943 instead of a 941, all this kind of stuff. So it's, yeah, it's not ideal. Does Wave provide bank feeds? I mean, can you do bank feeds through Wave? Yeah.
Yeah, and then they also have added a payroll feature, which is a paid function, but it's like there's like a flat fee per month, and then it's like a certain percentage per employee. And I don't know that it's like affordable, but it's very easy. It makes it easy if you're trying to do payroll. And then it is customizable, like QuickBooks, you can add your own chart of accounts. They did have like, you pick your industry and farming as an option, and so it does kind of create like a chart of accounts that is similar to the Pickle app, has like a template, and you can tweak it and go from there.
Cool. Thanks.